Imagine a scenario where the sun blazes down, temperatures soar, and the very sources we rely on for clean energy start to falter. This is precisely what's happening across Europe, particularly in Germany, where a confluence of high temperatures and reduced renewable energy production is driving up electricity costs. But here's where it gets controversial. Some argue that this situation highlights the vulnerabilities of relying heavily on renewable energy sources, especially when they're subject to unpredictable weather conditions. On Wednesday, European day-ahead power prices saw a significant uptick, largely due to diminished renewable energy outputs in Germany, the continent's largest market. We anticipate a generally bullish trend in Germany, with both wind and solar energy supplies on the decline, noted LSEG analyst Shulon He. This reduction in renewable energy is exacerbating the impact of rising temperatures, which naturally increase the demand for electricity, particularly for cooling purposes. For instance, the price for French baseload power for Thursday climbed by 4.3% to 97.0 euros, $113.49 per megawatt hour, while the comparable German contract surged by 18.4% to 111.3 euros per megawatt hour. These increases reflect the growing concern about meeting energy demands during periods of extreme weather. Adding to the complexity, France, which relies on nuclear power for about 70% of its electricity needs, has faced challenges due to the heatwave. Higher water temperatures have led to capacity reductions at several nuclear reactors, further straining the power supply. Despite this, the availability of French nuclear power has improved slightly, rising by 2 percentage points to 69% of total capacity. Renewable energy sources in Germany are also taking a hit. According to LSEG data, wind generation is expected to drop to 4.5 gigawatts from 9.1 gigawatts the previous day, and solar output is forecast to decrease to 17.6 gigawatts from 18.5 gigawatts. This decline in renewable energy production is occurring just as demand is expected to rise by 800 megawatts in Germany to 53.5 gigawatts, while in France, demand is projected to fall by 2.1 gigawatts to 44.1 gigawatts. Looking at longer-term contracts, the German year-ahead baseload contract remained untraded after closing at 85.5 euros per megawatt hour, and the French equivalent also saw no trades after settling at 61.4 euros. These figures suggest a cautious approach from traders in the face of uncertain market conditions. The impact of these changes extends beyond the immediate power market. A quarterly report from trading platform Trayport indicates that between April and June 2025, European gas volumes traded, both over-the-counter and at key hubs and exchanges, increased by 53% year-on-year. Power volumes rose by 36%, coal by 6%, and emissions allowances by 11%. Trayport attributes much of this growth to the heat waves in June, which drove up power demand and in turn influenced other markets. In response to these challenges, Germany's solar industry is urging the government to reconsider plans to end subsidies for new rooftop photovoltaic systems, a move proposed by the economy minister. They argue that such subsidies are crucial for maintaining the momentum of renewable energy adoption. Meanwhile, E.ON, a major German energy network operator, called on the energy regulator to increase future returns on grid investments. This comes as E.ON reported its half-year earnings on Wednesday, highlighting the financial pressures facing energy companies in this volatile market. As the debate over the reliability and sustainability of renewable energy continues, one thing is clear: the energy sector must adapt to the increasing frequency of extreme weather events. And this is the part most people miss. The solutions may lie not just in technology, but in policy and public support. What do you think? Should governments continue to subsidize renewable energy, or is it time to let the market take over? Share your thoughts in the comments below.